You might be wondering, but what if the market crashes? Excellent question. Buffett says that crises aren't exceptions. They're part of the cycle. The market is driven by emotions, and the intelligent investor must act based on reason. When everyone else is scared, the best opportunities emerge. That's exactly what happened in 2008 during the subprime crisis. While most investors were fleeing the market, Buffett was pouring billions into Bank of America, Goldman Sachs, and other giants. Why? Because he knew those companies would survive, and that their stock prices at the time didn't reflect their real value. He didn't try to predict the bottom. He analyzed the business. And that's one of the greatest lessons. In times of crisis, it's not about forecasting the future, but understanding the present. If the company is solid, it will endure. And when the dust settles, you'll already be in position. Another powerful lesson. Buffett avoids excessive diversification. That's right. Unlike what many preach, he doesn't believe in spreading your eggs too thin. To him, diversification is protection against ignorance. If you know what you're doing, you don't need 50 stocks. Just 5 or 10 great businesses deeply understood, wisely bought, and patiently held. That gives you focus, clarity, and amplifies your results. Of course, it requires study and conviction. But Buffett doesn't want to own a little bit of everything. He wants to be a partner in the best. And this philosophy also applies to individual investors. Choose companies you know inside out and pour your energy into them. It increases your responsibility, but also boosts the quality of your portfolio. After all, when you know what you own, you sleep peacefully. And speaking of sleeping peacefully, we need to address a rarely discussed point: mindset. Buffett has an impressive level of calm. He doesn't get shaken by market drops or panic over negative news. Why? Because he trusts the process. He doesn't depend on tomorrow's stock price. He's focused on what the company will be worth 10 years from now. That completely changes the game. Because investing at its core is an exercise in patience, in resilience, in ignoring the noise and focusing on what truly matters. Every investor must develop this emotional strength, because in the end, it's not the market that destroys portfolios, it's the investor's behavior. Buffett understands this. That's why, while others run, he stands still. And that self-control is his true edge. Now let's talk about compound interest. It may sound basic, but Buffett treats it as a force of nature. He says, money must work for you while you sleep. And how do you make that happen? By investing in solid assets and letting time do its job. The problem is, many people interrupt the cycle too soon. They sell when prices fall, spend their dividends, or keep changing strategies. Buffett reinvests. Always. And the result is exponential. The longer the capital stays invested, the greater the compounding effect. This doesn't happen in a year or even 5. The magic begins in the second decade. That's why he says, time in the market is more important than timing the market. Want to build real wealth? Start early, invest wisely, and don't touch it. Let time do the heavy lifting. And Buffett doesn't walk alone. He has a partner who's nearly a legend, Charlie Munger. Together, they formed one of the most powerful duos in investment history. Munger introduced the idea of inversion, the concept of thinking first about what mistakes to avoid. While Buffett focuses on what works, Munger is obsessed with what not to do. That partnership shaped the Berkshire Hathaway philosophy, a mindset rooted in rationality, independent thinking, and continuous learning. Munger also introduced the idea of mental models, frameworks for making better decisions. Together, they show that investing isn't just about math, it's psychology, strategy, and a philosophy of life. And to understand this partnership is to understand why Buffett's journey has been so successful. Another crucial element, reading. Buffett dedicates 80% of his day to reading. He says knowledge compounds like interest. A little every day, more clarity every month. And over the years, It transforms into practical wisdom. He reads balance sheets, newspapers, books, shareholder letters. He reads to understand the world, businesses, and human behavior. And that's a valuable tip. The more you read, the better investor you become. Because while markets change, principles remain. And the more solid content you consume, the better prepared you are to make rational decisions. Buffett never stops learning. And if you want to follow him, start by building the habit of consistent reading. It's quiet, it's slow, but it builds real advantage. Buffett also teaches about legacy. He doesn't invest just for himself. He thinks in generations. He created a holding company, Berkshire Hathaway, that will keep growing long after he's gone. He trained successors, built a culture, and established values. And that teaches us something profound. Investing isn't just about multiplying money. It's about building something greater, something lasting. When you invest with purpose, every decision carries more weight. You start thinking about stability, impact, and consistency. And that long-term vision even changes how you relate to money. Buffett wants to leave more than wealth. He wants to leave behind principles. And that can be your legacy too. A well-built portfolio, thoughtful decisions, and timeless lessons passed on. And finally, an important reflection. Buffett never tried to be the smartest person in the room. He tried to be the most sensible. While others chased complex strategies, he stuck to the basics. While the market chased one trend after another, he followed timeless principles. And it worked. Because in the end, the market rewards consistency, not flashy brilliance. You don't need to know everything. You just need to know what matters. Apply it calmly, logically, and with courage. Buffett proved that it's possible to win the game with integrity, simplicity, and discipline. And now, you have the tools to follow this path. The master has already shown the way. The trail is open. The only question is, are you ready to walk it?